if you're looking at something as an investor and you're not going to hold it for 4 years, you're just speculating, you're gambling over whether the EPS will beat the numbers that the street expects next Tuesday, right? And nobody knows. It's coin flip. When you're buying Bitcoin, if you understand it, I don't think you're investing, and I don't think you're speculating. I think you're saving.
Bitcoin biggest bull Michael Saylor said the cryptocurrency's volatility will always hurt those who invest purely to trade or based on speculation in a recent interview. The people that invest in Bitcoin as traders and they don't have a technology view or the macro view, they're always going to be disappointed because of volatility, Saylor said. He urged investors not to put more money than they can lose into Bitcoin and crypto markets, especially if they were basing trades on speculation, and said he is not in a place to give advice to anyone planning to invest or trade with Bitcoin over a short time frame. If on the other end you have a 10-year technology conviction and a 10-year macroeconomic conviction, or if you have an ideological conviction, then take money that you can hold for 10 years, Saylor said, adding that the volatility of Bitcoin does not impact him personally, as he has invested money he can afford to lose and can wait for the cryptocurrency to pick up from bigger sell-offs. Welcome back to Savvy Finance. In this video, we share Michael Saylor's best approach to Bitcoin volatility and how you can best play the game. Don't forget to smash the like button. Thanks for all your support.
When you explain about the fundamental of Bitcoin, we get inspirations. But when you look at the price of Bitcoin in our phones, a lot of people are discouraged because price fluctuates. As you might have known, 70% of the crypto investors jumped in last year 2021, meaning they don't really understand. They don't have the experience going through the whole market cycle. So when price of Bitcoin plummets, they panic and they capitulate. So how can they overcome this?
The question really is, are you investing or are you saving or are you speculating? If you're a saver, you're not really investing or taking a risk on a company. You're converting a weak property to a strong property.
Right.
If you're an investor, you have to have at least a 4-year time horizon.
4 years.
Okay. If you're investing in something thinking you'll make money in 4 weeks, you're not really an investor, you're a speculator. Now, if you don't know what you're doing and you're guessing, you're just guessing, you're just betting on black or red, I call that speculation.
Okay.
If you have a methodology, if you have computer programs and you have proprietary algorithms and you have special information that no one else has, you can call yourself a trader. Right? Maybe you're a trader, but either way, you're a trader or you're a speculator, but you're not really an investor. And what I would say to people is, if you're not going to hold it for a decade, for 10 years, I wouldn't even hold it for 10 minutes. I think the right way to think of it is, if there's money you need in the next 12 months, you probably should store it in a currency, like a stable currency. If I live in Korea and I have rent coming due in Korean won, then I would hold some cash balances in Korean won.
Right.
If I have money that I wish to save and give to my grandchildren, 10 to 30 years out, or even 100 years out, I want to keep it in my family, then you should be putting it into a portfolio of property, scarce desirable assets. So property, what is it? Bitcoin is digital property. Otherwise, buy the most valuable land, or you might buy trophy collectibles, very, Leonardo da Vinci paintings, Picasso, something that is rare and desirable and scarce. If you buy a portfolio of property that is, it's not a company, it's not a currency, it's something that affluent people will find desirable in 10 to 30 years, then that's a saving strategy. If you wish to take risk, if you wish to invest in companies, you're an investor.
Right.
Now you might decide that you think that Apple is undervalued or Google is going to perform well, or you might invest in a private company.
Right.
Okay. Well, the advantage of those things is they generate cash flows, but the disadvantage is they have risk.
Using an analogy, Saylor said Bitcoin is just like any other property you own. So if you're continually testing and marketing a property to see how much you can get for it, you're going to give yourself anxiety because you are going to see someone who is going to offer way less than you paid for it. And even when you get someone that offers you a 20% above what you paid for it, you are probably going to regret it in the long run. Bitcoin will continue to appreciate, and as such, any amount you sell it for today will become a big loss when it eventually appreciates much higher.
If you owned a Picasso, you wouldn't walk down the street and say, I want you to buy my Picasso from me right now. How much will you give me? Right? You're going to find someone that just lost their job. I hold a gun to your head and I say, you have to buy my Picasso right now. And they just lost their job and they're worried about maybe the Russians invading Ukraine. And they're like, well, if you absolutely insist, I'll give you 27 yuan for it if you must, but I don't want to buy it. Okay. And now you're like, oh, my painting's not worth any money. I hate myself. I'm going to kill myself. It's like you're doing it to yourself because you keep asking people to give you a bid. And you should just, Bitcoin and chill.
Right.
Take the Bitcoin and wait. In 100 years, there's only going to be 21 million Bitcoin.
Right.
And so every year, people are going to print more money. We're going to produce more products. We're going to produce more cars. We're going to produce more houses. We're going to produce more art. We're going to produce more music. We're going to produce more gold, more silver, more diamonds, more everything except Bitcoin. Bitcoin is the only thing we're not producing any more of.
Right.
It is the dominant digital monetary network in the world. It is unique. There isn't another one. There won't be another one. All you got to do is just get your piece of Bitcoinville,
right?
Your city block, buy 1 million Satoshis.
Yes.
Then buy whatever you can buy and hold it, because 1,000 years from now, Bitcoin is still going to be valuable.
Right.
It's a protocol.
Yeah.
If you look at the history of the English language, if you look at base 10 mathematics, you look at Arabic numerals, if you look at electricity protocols, once they get into the civilization, they tend to be very, very robust. And this is a monetary protocol. It's very robust. There's no reason to believe that your 1 million Satoshis won't have value 1,000 years from now.
Right.
Everything else is risky. I can't think of anything else I'd want to own 1,000 years from now or 100 years from now.
As stated by Saylor, we are going to create more of everything apart from Bitcoin. So there is no reason for anyone to be selling their Bitcoin. As Saylor said, buy Bitcoin and chill. Here at Savvy Finance, we know we will look back someday and wonder why we didn't sell our cars and even our houses to buy Bitcoin at under $4,000. Believe it or not, Bitcoin will be $1 million someday in the near future. Anyway, let me go buy myself some more Bitcoin and chill. Thanks for watching and stay savvy.